Hi, thanks for joining me on my market report. My market report is on mortgage rates. We kind of like to get what's impacting mortgage rates on a daily basis. We'd like to share that information with you. So if you're in the market for a refinance or purchase, you at least got a little background information where mortgage rates are going. So that will help you make it a more informed decision whether to maybe lock or float. These are things what we kind of term in the industry. A little bit about myself is I am a loan officer. I do work with the national lender. So if you guys got questions about mortgage rates or mortgage programs out there, go ahead and ask me if you're a physician or a dentist or veterinarian or pharmacist. We do got some a new loan that just came out for a physician's loan. So please reach out on that if you guys are, especially if you're new to the industry. It really helps out those folks. Uh, but in any case, if you guys have any questions or whatnot, please feel free to reach out. We're here as an assistance, help you guys out. Without further ado, we'll just jump right in here to see what's impacting rates today. We'll start with the economic data that's being reported today, and today we got the uh, Q2 durable, or I'm sorry, June's durable goods report coming out here. So the previous report came in at 2.1. I'm sorry, came in at 2.3%. This was actually revised higher, actually to like 3.2%. Unfortunately, this chart here that I get doesn't show the revisions. They came up with just the initial, but the good news was this came in at 3.2% back in May. Forecast come for 2.1%, and it came in at obviously a bit disappointing here at 0.8%. Now, markets aren't reacting negatively to this because the revision for May pretty much brought that up to almost equal where the forecast was. So the May's number kind of helped things out. Now, June's durable goods, when you exclude the big ticket items like airplanes and such, came in at 0.3% back in May, and forecast kind of for 0.8%, and it came in much more disappointing at 0.3%. Now, of course, we do have problems with manufacturing. We're not getting the supplies that we need. We don't have the labor, so we're kind of constrained. This is where part of the bottleneck is coming in, and why we're seeing a little bit more high inflation because there's more demand than supply. And so again, this is part of the reasons we're probably what we're seeing in the month of June here. Now we got a couple HPIs or home price indexes coming up here, and this one is by the FHFA. They look at conforming loan limits. So right now the conforming loan limit is 548 250, so $548,250. So loan amounts up to that. So the previous month back in April, it was 15.7% year over year, and it jumped all the way up to 18% year over year appreciation according to FHFA. Now the Case-Shiller one's another one. This kind of gauges the 20 largest cities out there, and we had a 14.9% back in April. Forecast gone for 16.4%, and it exceeded that to 17%. So again, the housing market was pretty hot back in May, as we're seeing here month over month. Obviously, we're seeing a pretty big jumps there. Last but not least, we got the consumer confidence. So for the month of July, so June came in a pretty hot number at 127.3. Forecast is supposed to show a little dampening at 123.9. However, it went upwards to 129.1. So consumers are feeling a lot better about where things are at currently. Now, obviously, we'll kind of watch for next month and see if this continues that because obviously the Delta variant's coming in. We're starting to get some more regulatory things coming in there. So we'll see if that mood gets soured with the new moves with the Delta variant and everything. Um, Headline news: stocks are down. We're taking our cue really from this Chinese regulatory crackdown. The Chinese market's been tanking the last 2 days. China has been kind of cracking down on a couple of technology sectors in its own country, and that kind of spilled over. Uh, we're having a little bit of a spillover today. Not as much yesterday, but today it's getting a bit more of a uh, spillover in today's market. Even though we're getting some Q2 corporate earnings, we had Tesla came in some high profits. However, even Tesla's down today, partly because the index, the what's going on over in China right now. And also today we got the Q2. Or I'm sorry, we got the Fed will begin their 2 day meeting. Tomorrow we get the announcement. There's no expectations of a rate change. However, they are going to be looking for any more news on possible tapering. see what the Fed thinks of it. Now, again, we're getting more cases in Delta variant, so we'll have to see what the Fed says about the increase of cases and maybe more lockdowns or whatnot. So ahead, maybe we're getting a little ahead of ourselves, but again, I think that's what people are kind of are concerned about. Let's see how this is playing out with the mortgage-backed securities. We're doing it well today. We're kind of regaining the losses we had yesterday. We ended up closing down about 13 basis points from the previous day, from Friday's numbers. However, right now we're up 19 basis, so we kind of made that up. So we're back to the levels where we were yesterday morning. So we're back to an improvement. We did have a price for the worst yesterday. A lot of lenders repriced for worse pricing yesterday. So we kind of regained that pricing back from yesterday. So we're kind of back to the same level as we were basically on Friday, at least Friday's level here. And we may see, if this continues, we could see maybe a little bit more improvement. But as of right now, we're up a little bit, as that kind of helped us out when the China crackdown came in. Equities weren't doing so well. Europe started buying more bond market. It became a bit more bond friendly, and that kind of spilled over to here, where the bond market is helping us out. And Treasuries also test this 125 level right now, and try and push below it. We're just under 1.24 at 1.239 right now. All right, folks. Again, much appreciation to you guys watching the videos. If you guys can, if you guys like the videos, we'd greatly appreciate if you can smash that like button. It really helps us out. And again, if you guys got questions about anything, we can be of any assistance. Please feel free to reach out, and we'll be more than happy to accommodate you guys. You guys have a great rest of your day, and see you in tomorrow's video. Bye bye.